In today's video, I'm going to teach you how to effectively track your sales and fees as income and expenses, as well as how to import PayPal or bank transactions regularly. This practice is crucial for maintaining accurate financial records and gaining insights into your business's financial health. Let's dive into it. First, let's focus on the importance of tracking your sales and fees. Think of your sales as the lifeblood of your business. It's the primary source of income that keeps everything running smoothly. At the same time, fees, though sometimes overlooked, are inevitable and can accumulate to significant amounts, impacting your bottom line. By consistently documenting these, you can make informed decisions about managing expenses and maximizing profits. Start by choosing an accounting method that suits your business needs. Many businesses use cash or accrual accounting. Cash accounting records transactions when money actually changes hands, while accrual accounting records them when they are either earned or incurred. Whichever method you choose, ensure you're providing a comprehensive picture of your business's financial standing. To track your sales, maintain detailed records of all transactions. This might involve creating invoices, capturing receipts, and noting down every sale, whether it's a product or service. Use accounting software or spreadsheets to systematically log these records. For fees, consider the various types that can arise, such as transaction fees, service fees, or any additional charges that might apply to your sales. Being diligent about recording these ensures you have a precise understanding of your operational costs. Now let's talk about importing PayPal or bank transactions regularly. This step is essential because it provides a direct link between your financial records and actual cash flows, helping you avoid discrepancies and simplifying your bookkeeping process. Many modern accounting tools offer integration features that connect directly to your PayPal and bank accounts. This not only saves time but also reduces the margin for error compared to manual data entry, ensuring accuracy. Start by checking if your accounting software supports automatic bank feed features. If so, set it up by securely connecting your PayPal or bank accounts to the software. Often, this simply involves logging into your bank through the software's interface and granting access. Once connected, choose a regular schedule to import your transactions. Weekly or monthly imports usually work well for small to medium-sized businesses, ensuring your records stay current without overwhelming your system with too much data at once. As transactions import, verify the accuracy by comparing them with your own records. Look for any discrepancies, and if any errors arise, resolve them promptly to maintain the integrity of your records. By routinely conducting these checks, you'll ensure everything aligns perfectly. In summary, regular tracking of sales and fees coupled with systematic importing of transactions creates a detailed financial picture of your business, boosts your strategic insights, and maintains compliance with accounting standards. Stick to these practices and you'll find yourself equipped with the clarity needed for your financial success.